What's the credit cash to wealth strategy? Simply put, the credit cash to wealth strategy is the process of leveraging personal and business credit to create substantial profits and income. In our case, this involves obtaining lines of credit and cash loans from banks via your personal and business credit to fund a passive income opportunity. And when we say passive, we mean with little to no effort on your part. There are ways to do that. One is a joint venture to lease your credit for a monthly fee, and the second way is our Pay It Forward program that makes you money by helping others to go into funding. The key principle you'll learn is to make money work for you rather than the other way around. Businesses utilize expert rating systems in the alternative markets to generate high and consistent returns in this way. And by the way, the banks have implemented this cash flow concept for decades. Here's how banks do it. When you make a deposit in your savings account, you're loaning money to the bank at a very low interest rate, nowadays around 1%. The bank then leverages that money through a process called fractional reserve banking and then loans up to 10 times this amount to someone else for a home mortgage or a car at a rate of 6 to 20%. But because the bank has leverage on that money, the real interest rate on your money is over 100% in most cases. And that's a great deal for the bank. Our credit cash to wealth strategy utilizes the same principle, except the borrower is us in a passive income vehicle. And that passive income vehicle attains warehouse lines of credit, utilizes leverage from the bank at low interest, and places that capital in a diversified portfolio or proven expert trading system. These systems generate a substantially higher monthly income than the cost of borrowing that money. Historically, these trading systems have generated good monthly results and represent an excellent opportunity to create monthly profits. In addition, because those funds are leveraged twice, first, when we obtain the loan, as that costs nothing up front, and second, when we put it to work, achieving a good result is easy to do. So why would we leverage or borrow money to fund this kind of business? Simple. Here's an example. If you could borrow or leverage money with a debt service of 1% per month and use it to generate a profit for your business up to 2% per month, how much should you borrow? The answer is as much as you possibly can. If you can reliably make more on borrowed or leveraged money than it costs you, then of course you want to borrow or leverage as much as you possibly can. But isn't borrowing or leveraging money a mistake? Not all borrowed or leveraged money is considered debt. Money borrowed for consumption definitely creates debt. But if you borrow or leverage money to create profits, that's called business capital. If that capital is utilized to create passive income, it creates cash flow and increases the net worth of the business. The lender gets their fees and the business provides you with monthly income, so everyone's happy. When you join our group as a member, you'll learn how to access cash and put it to work for you immediately. So join today and begin capitalizing your dreams.
For those of you that do want to stick around, I want to show you why this works. This is going to give you a lot more confidence in how money works and how we can turn what you have into more wealth than you can possibly imagine. So I want to show you this chart. This is one of my favorite charts when it talks about money and finance. If you see this little dot right here, this is Bitcoin. Bitcoin's been crazy, $5 billion worth of Bitcoin. There's that tiny little dot. That's what it's significant. That's the significance of all the Bitcoin in the world, that one little dot. This other fat dot right underneath it, that's all the silver in the world. Underneath it, here's the wealth of some of the richest people on the planet. There's Warren Buffett's wealth, there's Bill Gates' wealth, and there's Carlos Slim's wealth. Now watch this. This is where it gets magical. This is all the wealth of all the corporations, all the big corporations of the world. Now you see that all the Fed's balance sheet, and here's the coins and banknotes of all the U.S. coins and banknotes in the entire planet. So you can see here's all of Bitcoin, and here's the banknotes. Now this is where it starts to get crazy. There's real estate. There's all the gold in the world. There's all the narrow market money. Here's all the stock markets. Now what you're showing here is the worth of corporations are worth more than all the money in the world. In other words, they've inflated the value. There's actually more money in the worth of the business than there is money itself. So money has now changed its idea. Instead of the substance of trade, it has become the substance of an idea or of a potential worth. It's an idea. Money has become an idea. And you have to get this. So when people are saying, well, there's only so much money, no, it isn't. As long as there's ideas, there's more money. This is all the stock markets. This is all the broad money. This is all the global debt. Now watch this. I just showed you that there's all the money in the world, and here's all the debt in the world. We have more debt. We have about 10, 15 times more debt than we have money. Now here's the magic. The debt becomes the money because your servitude, your slavery to your debt becomes the payment for their wealth. So all these companies are based on the idea that you are enslaved, and we're not going to talk about slavery right now because that's a great subject, but your slavery to debt is what they build their wealth on. The idea that you're going to pay them back with your time and your life and your wages and your effort. Now it gets really cool. See that long line right there? That's called derivatives. Watch. Here's all the debt in the world. Remember how big Bitcoin was? It was like a tiny little square. This is called a derivative. $630 trillion there, and it keeps on going. A derivative, there's $1.2 quadrillion, and it goes on and on and on and on. A derivative is what happens when a bank takes your debt, when you borrow money from them, and then they sell it to another bank, or they invest in another company, and it becomes worth more on a book than it was ever in paper. So you take a $100,000 loan and they sell it. Just simple math. They take a $100,000 loan and then sell it to another bank, who sells it to another bank, who sells it to another bank. On paper, it becomes $1 million. So what they want to do is they want to loan as much money as possible. That's why it's so easy to get into this business. That's why it's so easy for you to get money, is because your debt becomes wealth to them. So why shouldn't, instead of us using debt for slavery, let's use debt for freedom. Let's use other people's money the same way they're using money. Let's take it and use it to increase our bottom line. And some people are thinking, well, some people are actually thinking about money like you're taking it from a person, or you're stealing it from a bank, or if you don't pay it back, then you've done a really bad thing. It's not real, guys. I mean, if you do it wrong, if you do it illegally, it's real because you're going to find yourself in jail. Don't do jail, but also find out what the game is that everybody else is playing. If you can see that many derivatives in comparison to this much money, then you know there's a game going on. Participate in the game. You start off small, a couple $1,000s, $500,000. You end up in $1 million home. You start driving a brand new car. You start participating in the wealth game. We can show you how to start participating. They want to help you participate because your $1 million is $10 million to them. So do everything legal, do everything safe, but get in the game. There's a beautiful game to be played. And I'm playing at a really low level compared to the guys who are making $1 trillion, right? There's another game level. At the end of next year, I'm going to be at a new level, and and then the year after that, I'm going to be at another level. When they say that if you're paying taxes, then you need to hire a new accountant because there's a new game up there, right? You make the $1 million a year. If you're still paying a 50% tax bracket, you got the wrong accountant and the wrong lawyers because it's a different game at that level. So if you want to be up with the big guys, you got to learn how to play the big guy games. And this is one of those. I'm going to teach you guys how to get free from the debt, get free from bad debt, get free from bad credit, and let's start turning it into something good.